And then I want to share my screen first. Okay, so you can see my screen because I'm going to talk a lot, but I'm going to touch only the essential part because of time limitation. So I'm not going to like a full like a screen mode. I'm going to using this the fast way to change my pages. Okay, so I briefly talk about today's agenda. And we will have two sections. First will be mostly I and you and talk about so we'll set the stage about today's topic, and then the second part will be the discussion and Q&A. So it is a free discussion with all participants, and then also specifically we have some guest speakers talk about more about their insight. Okay, so first, because we are all professional in ESG and sustainability space, so I'm not going to talk about detail about it. Just is like we should know that the only difference that before last year and this year was this IPCC report. So our time frame shortened now. So we need to achieve, for example, that all the like a carbon zero, net carbon zero like a scenario, they should achieve their goal in a shorter time than we planning. And then otherwise, all we know about why it is required now in the globally. Okay, so this is the one example of the ecosystem. So we can think about ecosystem has three key stakeholders. The first one is enterprise itself, and then investors, and then third party, especially government and NGOs. And also we have a supporting industry, like the main topic of today's, like a solution provider is management, sustainability and ESG management, and also like data providing and assessment of this space. So we can think about this whole space, have in mind. And we have recently we have a lot of the like investment activities going on, and particularly I'm here noticed is that the amount of the funding in the United States finally overtake European country was this is one significant that we can notice recently. And also we should think about what is the for the ESG management side, what is the core factors. So we can think about risk. So it's well on all kind of the environmental or physical transition liability risk, and also opportunities. And then we can think about a lot of the opportunity based on this. And I'm going to talk about this more later, especially in integration with how we can have leverage this opportunity in integrating with digital transformation for enterprise. And then also you should think about impact. This is most important thing why we do sustainability. Because of this, we wanted to impact to have positive ways and then limit negative impact for our society and our industry. Okay, and then for the investor side, we can think about what is the industry sectors we are going to invest, and then strategy like active ownership or some of the total integration. Many strategy is available now, and then we should think about what is the material factors we should consider. And then this is the one actually just we already know that there are a lot of different reporting framework guideline is messy. Particularly, we have like a GRI, SASB, TCFD, SDGs, and then also WF. Have in mind. And then ESG reporting trend is that we already know that there are many different standard bodies now collaborating to make one unified worldwide standard for reporting. And then it's working still working on it. And then also there is a regulatory scheme like European country and then in United States and also in other countries. Especially this maybe you know already know, but recently there was a SEC actually sent a letter to the fund managers whether they wanted to scrutiny about the labeling as a ESG fund because of the some greenwashing, and then there was some like protecting to the investors. So that was a recent trend that they're looking at the eyes on this ESG labeled fund. And then this is one trend we can notice recently. Okay, so today's main topic. First, I want to say you that I will look at this industry and this ecosystem very carefully, and then look at the what is going on. And then for myself, as I 30 years like expertise and experience in IT and digital technology, or technology matters. So on view of this, my like a technology views to what is needed in this industry, in this ecosystem. And I look at what kind of like a digital technologies can have for this how they can support this ESG sustainability imperatives. And then I found that there are two actually the divided group can support. One is the sustainability management solutions. This is the solution actually supporting in-house. Each enterprise can manage their ESG or sustainability management effort. And the other is assessment. Usually they are tightly related like investors side. And then they provide the data and then some of the like a rating and the scoring to have to like make a decision for the investors. So I try to have some unified view, because they should be the like integrate for the whole community. So first one that I noticed that there was some fragmented like industry sector for the sustainability management solution providers. So basically what they're doing is automatic data information retrieval and data management and performance and project management. And also what they're doing is a compliance management and automatic reporting. This is a very important part for this in relation to the financial sectors. And also I look at who is a player in this space. And then so what is the ESG sustainability management solution ecosystem? So recently there was a Bodentics. So Bodentics has some report to have their research about this industry. And then they look at the like what kind of the sustainability management solution providers out there. And then they categorize them by three. And then first one is actually they are traditionally in the field of we call EHS in the management. For they are related to some standard like ISO and other regulatory scheme to manage it for each enterprise to comply with that regulatory scheme. And then also there are new coming like providers, they have expertise in IT and digital technology and data handling and other like, for example, enterprise-wise like business intelligence, like for example, SAP, that they provide the ERP or the other, like for example, supply chain management software providers. So all they are existing here. So they are not, I think that compared to the like ESG sustainability assessment solution provider I'm going to talk later, they are very divided in their origin, and then they are very vertical, and then they are dealing with some specific customers that they already have in their business in their specific industry sector, like real estate, construction, oil and gas, and all the verticals they are related. And then here is the one I'm going to share this one, so you can see that there are some website that provide like here is you can see the 25 management solution providers, and here is a 40 providers, and then mostly you can see that, there is for the EHS providers that they have a specifically, they have a particular client in their have a mind, and recently they found a new opportunity in ESG. Actually that they are trying to including the factors that they didn't do before, especially the governance factors and the society factors in ESG sustainability matters. Okay, so assessment. This is actually the we as like ESG sustainability matters we well on because of the this is very tied to investors, and most of the solution providers are in the financial sectors, like some credit rating agencies or some of the like a fintech provider. So this is more harmonious in the industry and business wide, but the problem is that there are different way to like rating, different way to measurement, and I'm going to talk about later. But otherwise, this is very homogeneous like inclusion. And then what they're doing is use a controversy assessment and sustainable goods and service assessment, and then sustainable development goal SDG, yeah, UN SDG assessment, and then impact rating, and then also like a corporate assessment and ratings. And this is most part is a rating here. And then also what they're doing is like a benchmark analysis and then physical climate risk assessment. This is one actually recent, there was a more sophisticated invested one, including more like particularly based on data related to ESG sustainability, and then also daily monitoring and all that. And then this is more we may be familiar with what they're doing. So, but here you can see that what I found in the like, for example, ESG sustainability management solution ecosystem is I just counted around 50. But here is more than 600 ESG assessment solution provider covering ERM. And then also they provide different ways, but mostly they are in combine of the like ESG data product and then performance rating service providers. And then we can divide by the we know some of the one MSCI we well know about what they're doing, and then they are very big providers. And also like we can divide it some way that here is you can find out the well-known names in here like Bloomberg, MSCI, FTSE, something like S&P Global, something like that. Okay, and then I'm going to skip over this one, then what their rating scheme or something like that. And then also recent trend is there is a lot of the consolidation among these service providers. So you can see that they are now in consolidating. And then, okay, so I'm going to talk about based on my research and insight. Then I'm going to deliver you what is the service management assessment issues, challenges, and solutions. So I'm going to skim over, I'm going to touch on the very like essential part. So actually for the low data means that there is inside and outside of enterprise related data information. And then we know that the lack of data coverage and transparency, availability, and accuracy, and then also data quality control. So we need to be like a challenge and solution requirement, like so this is why we need a digitalization. And then we have like some central strategy of this information. And then we need to enterprise-wide data and the supply chain related data capture, processing, storing. And then we need the AI big data analytics for this work. And then also here is like is a well-known metric, or here is a data governance is very important. And metrics is well-known and for all the ESG professionals, like in E, for example, GHG emissions, and S, and like data breaches for the privacy data, and also like a number of women board like inclusion, diversity, and inclusion matters in governance. So the matter that this is well on again MIT paper, like a use of different measurement ways, like unity indicator methods, divergence, and scope a set of metrics. And then also we have like we are delivering very unclear way to understand what is going on. and then legal verification and the measurement details, and then here is very important. We cannot measure outcome and the real world impact correctly. So we just counting on something that the metrics is something input, but we cannot measure completely of the like outcomes and real world impact. And so what you need is some standard analytic rigorous measurement where it's consistent in comparability and should be cost effective. This is for the concern about this, for example, SEC. Now considering it should be like less complex and cost effective and traceable and informative ways for the regulators. And then for the, we need to think about the governing outcomes and impact. And here, I'm providing another here's a space KPI. The reason is that the most of people talk about like a data and rating providing means the metrics is data and the rating is a final result. But actually, you got the one. Actually, I give one gray area is a KPIs. So actually, KPIs can be like just one metric. For example, diversity metric is just counting, or just one metric, or multiple metric. For example, that for the like a climate change risk management KPI, then you need a multiple metrics to measure to get the result. So I including this one as so another factors we need to consider as a KPI. So actually what you're actually doing in the management side is you measure the KPIs, not metrics. Metrics are part of the KPI. So I make this separate one. So for example, we need to like risk opportunity reward impact we should be think about. And then here is like dynamic and time sensitive materiality. We need to talk about it. And then the recent trend, the double materiality we should consider. And then here is very important, high resolution ESG KPI. This is required because recently there are more and more like sophisticated investors. And then there are several surveys that the most of the like famous in-house investor, like fund managers, actually they developing their own ways to like assess their portfolio companies' activities and performance. So for the provider side, actually, we need to be more sophisticated. We need to provide a high resolution ESG KPI for the like, for example, depending on maturity. And then also we need to think about like whether there can be like a provide, we call like investor grade, like investing grade, like metrics and KPI. So we can measure like a positive ROI for that. And then this is on recent trend. We need on another like a forward-looking analytic tools to like a future performance. So we need to provide like a, for example, AI can predict something. So we need some data technologies can have this for the like a to link with this ESG performance and the management with growth, profitability, productivity, and risk resilience to should be linked. And also for the final measurement and assessment, that the assessment assumption are explained clearly. So we need to provide a clear explanation. And then we wanted like a different weight of ES categories. And then rating method is opaque and not very comprehensive. And then quality measure and the management practice is not well done. So we need to be like like a lot of the different characteristics we need to provide for to make this as quality and like more like accelerate our sustainability like effort. And then also like they need to be like a truly like a business industry specific information we need to provide. So we need to not yet we have any one standard ways of the reporting. So we need to be find out like a right framework to evaluate the ESG sustainability information critically. And then also here is like a potential monetary implication is very important. Even the ESG like sustainability related information we call like a non-financial, but the recent trend that we need to be think about how they are related to financial performance. And then so we need to provide like a so integration here is like you can talk about like how we can integrate with the sustainable reporting and the financial reporting to be integrated to both sides. And then we need to think about ROI of the ESG sustainability management effort here. Okay, so I'm not going to talk about this one. You can see it later, and then we are going to have another webinar specifically focus on this why this ESG digital transformation integration is imperative for this ESG sustainability ecosystem. So this will provide all the they provide some answer that actually that how they integrate to provide all the challenges in here. So we are going to have this one in a separate webinar later. And then here is a one I recently think about, and then I also have a design that my own ways to actually to realize that my idea and insight to as an integrated platform. And one side is a management platform, and the other is an assessment platform. And then the problem is the communication. So we have also guest speaker about they have like a blockchain based securing data credible data sharing solution to providers. So we can hear about that. But then we need to linking solutions so we can provide a credible and transparent solution to both sides. So they can measure in a transparent ways and evaluate and then inform the decision for the investment and then inform decision about the regulators, how to they regulate their industry. Okay, so here is, for example, we need to be modular-based, flexible component solution and the data governance and the system. And you can see that this is one actually that I provide in here challenges and provide how actually they integrate that as a solution and then platform to provide all kind of the issues, challenges that to attack in here. So this is under actually I'm collaborating with the one company in South Korea and one like some government bodies to developing this kind of the like a unified platform, and then it's under progress now. And then I'm not going to show you this one. This is actually the what this doing is this is actually the I developed like a blockchain data sharing platform. So for example, that in here that the way actually that you secure and the credible way to data sharing. For example, that the assessment party, like when you're doing reporting rating, actually that you communicate with the target party, and then you communicate with the sustainability the professional in-house, and then communicated ask the question is everything. Rather than doing actually, we can have like a common depository of the whole the data sharing, and then in a way like a secure and a credible way to sharing, it will be better. So this is the one actually the I developed, and then this is one actually this is the one I developed for the like some healthcare image medical data sharing, but the function is the same thing. So you have your own data in your in-house. For example, a company and company B, and then also rating providers, and then they can share whatever they want through this secure and then confidential ways to sharing. And then this is one actually my recent effort actually. I'm trying to have this integrated view over like ESG sustainability plus digital transformation to support and accelerate this space. And then this is one actually that I'm doing some like a thing that. Okay, so I talk about everything that I want to talk today, and then I'm going to turn over my speak to Yuzen is talk about important topic that I mentioned about stop sharing, about his view about how we can integrate this non-financial ESG sustainability information with like a financial information to have a combined reporting. Yuzen, can you are you still there?
Yes, hi, thank you very much, Alex.
Yeah, present yours, and then you can talk about it.
Perfect, thank you so much. And you know, that's a very comprehensive presentation you provided, and a lot of great insight. There's a whole lot of information, and certainly the things that you just described around you know, blockchain and the future of where we're going with data is very important. There's a lot of initiatives working towards that. So I'm looking forward to seeing some of that and discussing more around that. I'm going to share my screen here. Okay. You know if you can see that.
Yes, I can see that.
Okay. So I want to talk today a little bit about what you described related to financial performance and ESG data as it relates to combining the two. So essentially what we've done is I'm going to give you a little history about us, and then kind of get into our methodology. I think that's important, and then a little bit of where we're going. So just you already know who I am. You've seen that, but I want to talk a little bit about my partner. His name is Michael Moyo. He and I got involved back in 2008, 2009. At that time, sustainability was very early on. There weren't a lot of discussions around it. The protocols were all over the place. So there's been a huge sort of evolution since then. A lot of the groups that we knew then had been now acquired and moved on to quite a number of different larger entities that have acquired them. Here's a little bit of our lineage. This is our history. So in 2007, we started this process, and in 2009, we created the very first sustainability index with NASDAQ. And it was only 50 companies because we actually had to do the drilling down into what then CSR reports, and the data was very limited. So it's a very big challenge to try to figure out, what data is important, which one moves the needle, and, creating the key methodology that we have today. And so if you fast forward, by the time we got to, 2016, okay, now we've got 400 companies in our index under the call sign NQCRD, certainly growing that model. And of course, now today where we're at, not many years later, all of a sudden there's a huge expanse of ESG data. And as you mentioned, over the last couple of years, it's been quite incredible. I would direct those on the call to global.com. That's our site that we use to develop the products, as well as Susco Score. I'm going to talk a little bit here just briefly. I think we already know this, but the momentum is pretty heavy right now. And so our real, I think, differentiator relative to many of the ratings agencies that you just laid out, all over the place, but certainly we include financial data as part of it. So we have ESG plus F. And the reason we did that early on was that we felt that for, just even a general investor, it'd be very difficult for them to sort of cull out what the environmental, social, and governance risks might be, and how does that relate to financial performance. And so, I think if we fast forward now, you've got quite a number of ratings. You mentioned MSCI and some of the others. If you're a corporate or you're a financial institution, asset management, you're looking at all these different ratings and trying to sort of understand each one, their methodologies. Some of the methodologies, as mentioned, were a little more opaque, not necessarily publicly data provided information, and maybe not even off KPIs. So we really kind of took a more standard approach. And part of the things that we do are custom indices and solutions and diagnostics and screening. Our focus has been on ESG investing, but certainly gender diversity, DEI inclusion are things that we've been monitoring and tracking. And of course, net zero and smart cities, some of those things. So as we get into it, we really use 40 key indicators. Those indicators go across social, governance, financial, and environmental. What we found, obviously, is everyone reports the financial data. We found the utilities and other oil and gas and mineral mining, certain industries, they do very well on reporting environmental. Particularly, Europe has been ahead of the US, I think, due to the Paris Accord. We got a little bit behind, but nevertheless, environmental seems to be an area that, is, of course, maybe weighted of higher risk. So therefore, we find that data seems to be more prevalent. The social and the governance there's a huge gap there. I don't believe that companies, corporates, even asset management groups, understood the true value of what the social and governance data and KPIs, what that meant, and how that related to the performance of the company. Certainly, what we've been finding, and we can talk a little more about that, is the DEI information. When we get into the social and governance, that tends to also drive the environmental and financial performance and risk, just because of the nature of the data and what we're finding about that. So we really weight these equally across all the categories. And we've looked at over 40,000 companies globally through all the exchanges. So we're global. We take the data. Our data is coming, our KPIs, which are aligned with GRI and SASB and SDGs. Usually it was an XBRL format if you're familiar with GRI. It comes into us through key providers. Refinitiv is one of our key providers. That data, they have their ratings, of course, and others do. Typically, you'll see, the rating from a Refinitiv or some of the other groups providing, an ESG score. For us, we only score the companies that not everybody gets a score. So you have to meet certain criteria in our rating, in our methodology, to get scored. So we have basically, out of all the companies, 9,000 actually fall in the universe that we could work with, that we felt, okay, these are the companies that meet our criteria. 7,000 of those, after we've done some of the negative screenings, we have now the ones that we can use, and that gets netted down further to about 5,500 companies, of which, once we screen those for financial, to meet the minimum requirements, we end up with about 3,000 companies. So what we have is really a Susco 3,000 that we create ratings and reports for physically, and I'll talk more about that in a second. And so out of the 3,000, we benchmark 1,000 as best in class. So these are 1,000 global companies that meet the criteria, and they're above the baseline on the ratings versus the 3,000. So if you were to compare us to some of the other ratings agencies and groups, we're different in the fact that, one, we include the financial as a combined report. The second is that we don't rate everybody, and if you think about the number of metrics out there on some of these platforms, on KPIs, on Refinitiv, it's over 430. Bloomberg's got over 600. There's so many metrics and KPIs to understand and look at, trying to figure out which ones really matter, or what are important to us. So we've netted it down to the ones that we feel matter, and that's basically where we're at here. So this is really our key methodology. This describes the 40 metrics that we look at. How we came up with these really has been a work over time since 2009, and when we launched that first sustainability index with NASDAQ. And so we realized that we can't just rely on every metrics. If you look at the corporate environment right now, what we have is companies out there trying to figure out the rating systems, how to perform better, and which are the key performing indicators, which KPIs really matter. And I think that's been a big challenge, given now that we've got all kinds of different types of requirements, as mentioned, coming from the SEC, new guidance. Recently, NASDAQ indicated that they're adding DEI indicators that are going to be required. So I think there's a lot of understanding that needs to be met by the market, and they're trying to do that. And I think there's going to be a big compliance issue. Our largest challenge, as you can imagine, is the data itself. Even with only 40 KPIs that we know are really driving risk and performance, we found that we've got missing data. And if you're not in the 3,000 and you meet a certain financial hurdle, benchmark in terms of the company's size. And what we find is that even with that, many of them are missing a lot of the social and governance data required for us to rate them. So they just didn't make the cut, which is something that we think is going to be a huge improvement here coming in the next 2 to 3 quarters with SEC guidance and some of the things that are being done in the market relative to the diversity and inclusion data that is going to be required by public companies. We do not put individual weightings on each of these. They're equally weighted, and this has been our methodology since the beginning. So this same methodology that we use drives our NASDAQ NQCRD 400 companies, which drives the Susco 1000. And so part of the work that we do is on the corporate side, providing some diagnostic support for companies to understand their gap analysis and some of the other things that they need to provide in terms of data, and that needs to be transparent. So we don't take that in directly. That data has been, verified through a third party, and we import the raw data and we convert it into the scores. So the other thing that we do is we support the financial groups, and particularly the buy side analysts. One of the first products we've come out with, which is available through Refinitiv. We've got many downloads there. Hundreds of thousands have been pulled down so far. These are our 2-page company snapshots. At the end of this presentation, I have my contact and you have my LinkedIn. I'd be happy to send anybody some samples if they'd like to see this in our methodology. But essentially what we've done is we've combined the 4 quadrants, ESG and F. We basically rate them, given a score, a direct rank, and a star rating, which is aligned with their score. So if they scored very well relative to peers, then they'll do well with the star rating. And we provide, if you look at the bottom, very difficult to see, but again, I can share more with you. You'll see that we provide, and we give them the best 2 KPIs and their worst 2 in terms of, where they scored. So a lot of what we found, in terms of the downloads, probably it's almost equal. About 40 to 45% of the downloads are coming from buy-side analysts, financial institutionals, other types of groups that are really involved in asset management and portfolios. And the other side of it is the corporates, which particularly we're seeing investor relations, we're seeing compliance, a lot of sustainability folks, M&A, and a couple other key titles that are coming in terms of strategy. CFOs are really beginning to take notice. I think, when we provide these, what we find is that, in Europe, we were getting a higher uptake than in the US. And then within this year, US becoming back on a signatory as the Paris Accord with realignment there. And with the US's push towards green investing, as you can imagine, there's been a heavy push, to follow the money. So ultimately, companies now are really taking notice, and they're getting a lot more interested in what the ratings agencies are providing for against their companies, and really looking at what they need to do on the gap analysis and what they need to do physically on their framework and their reporting capabilities. So we're starting to see a really large group of companies now taking a real proactive approach, as well as the asset management groups are also being heavily scrutinized, as you can imagine. You just mentioned SFDR and some of the other things that are coming from the SEC. I think the requirements, for the financial and institutionals are going to be just as heavy because you can't just put a ESG sticker on things. So the 2-pager is our sort of initially our first cut at what we provide to the corporates. We have a much deeper dive product, which is a 10-page diagnostic and peer report. This report really goes deeper into their gaps, goes deeper into their transparency. And we've been pretty much monitoring diversity and DEI information around social and governance from the beginning. We've got a lot of initiatives there, looking at that data and how that affects performance. Probably more on that will come out later in the year. We're doing some work there internally. And so, what this does is this really supports the evolution of sustainability and ESG reporting, again, as it relates just to not just ESG, but financial and really transparency. I think that's a big deal. Given the data sources and where they're coming from, there's a real importance of verified key performing indicators and making sure that that data is in the right place. And I think once that starts to really get a lot more momentum, then you'll start to see a lot more due diligence by the asset management groups that can actually see the data once it's available. We do have transparency reporting indicators as part of what we do. These are relative to R, E, S, and G, and F, our 40 metric. Again, there are others that are leading indicators we look at, but certainly I think the importance is just for our 40 that we know that drive the metrics and drive the risk performance. We realize that it's important to have as many of these indicators provided relative to the type of industry that the potential corporates are in. Our distribution right now is on Refinitiv. You can download these there. We certainly have quite a bit of that happening. And as I mentioned, we've got a lot of investor relations, CFO, a lot of M&A and strategy offices and sustainability folks are now really taking that seriously, and a lot more due diligence is being done. And they're really sort of an aggregation of data providers and data supporters. I think Alex mentioned, the EHS community is all adding in now sort of layers of ESG reporting to their software. A lot of other groups are doing the same. So I think we're really going to get a lot better data here soon, which is really going to improve the ability to have this transparency that's needed and really support improvement, which is what we want to see. NASDAQ, as mentioned, that's where we started, and we're continuing to work there. We're very excited to hear about their diversity and inclusion related to some of the things that they've aligned with SEC and got approved. So we know that data, which we find many times to be missing, is going to start being required if you're a NASDAQ listed company. So that compliance is going to really help out providing a lot more transparent data. New data is a source of buy-side financials. Go there. So we provide some data there and some information for folks that are looking for our products related to the buy-side financial and asset management groups globally that are looking for alternative data solutions to integrate into their financial making decisions and investment decisions. That's what I have right now. I saved some time for some questions, and certainly you can find more information on crdanalytics.com, suscoscore.com. We're doing some things on our Susco site, on our e-commerce, so we're updating some of that right now as we speak. And be happy to provide any information to anybody after this relative to methodology, and provide them anything that they want related to sample reports directly, if you'd like to have that.
Okay, thank you. Okay, so we finished the first part. Actually, we passed over 10 minutes more, so
sorry about
we
that.
want to quickly go over another session. So we are going to start the next one of the discussion. Actually, here we have two invited speakers. Frola will talk about very important the solution based on blockchain to like next to evolution of the business intelligence through the verified ESG and impact data. So could you talk about this topic about 5 minutes? Oh, probably he's not joined. Okay, so probably some connection matters because I think that she is now in South Africa, so I'm not sure what the status of her. Okay, so and then I'm going to talk about next one, actually the FinScience AI solution for the next generation rating solution. Okay, so I'm going to share my screen. Okay, so I'm also working with FinScience. So I have some presentation for FinScience AI solution. So this is a next generation rating and then data providers. So we collaborate tightly, and then I provide a market insight too, and then we work together to develop the next generation rating solutions. So basically, this currently they are more focused on for the European market, but they are going to turn into more like global. So they are currently working on the SDG. So what they're doing is actually the based on like a performance of the ESG certificate performance of each company. They evaluate this what their performance over the company in the individual companies if over like a 17 ESG like SDG goals. And also they working for the industry-wise performance and then also jurisdiction-wise performance. And then what they are particularly different from is the very sophisticated and comprehensive data set they're gathering. So they not only they using the internal score, like a company-wide generated score, and then all kind of the just not just the sustainability reporting, but they are all relate to that voluntary disclose their information. Also, they have a comprehensive ways to gather external data source. And then it's all done automatically using AI and then some big data analytics. So for example, that they are measure over 400 like SDG rate indicators and then data sources, and then also very comprehensive and AI driven, and then very frequently update, and then a very sophisticated like a sentiment analysis and corporate reputation analysis and green social sourcing and the controversial activities and benchmarking. So this is some way. Actually, we have like international business development director is now with us. So maybe you can ask something to him, but I'm going to show some quickly about what they're doing. So actually they can provide this is the one currently based on SASB materiality evaluation for industry sectors, but we are talking about like a dynamic materiality measures. Actually we know about how to do, so we under implementation of this materiality based on dynamic materiality determination. And also they can track over for the US market, like for example, here is the one, and I produce like a impact assessment for the S&P 500 high-tech industry. So here is some high-tech industry individual companies performance and over their industry-wide performance, and you can have a visualized ways to look at it. And then they are also, this is one actually that looking at the not just for the risk and opportunity, but the impact in an integrated part of the evaluation. So this is the one that required for the next generation rating providers. Also, we are not just for the SDGs, we are looking for the how to extend for the like a particular like a standard bodies or some recommended bodies like a reporting scheme. So we generate mapping scheme of the, for example, SDG and SASB and then GRI and then also WF, and we can do anything. So we can extend to using based on AI to the once we evaluate for the SDG, and then we can include the other like a reporting framework based on our base work. So this is under progress, and then we provide a very easy to understand like a scoreboard, and then so this is one actually they have to like enterprise how in the owner like regular base, and then how they're in the real-time base, how are they are doing performing their ESG management performance, and then also they can compare with the peers. Also, investors can use this as like informed decision making for their portfolio companies. Okay, so that's the one I want to talk about. So we have officially 5 minutes more to discuss. And then also, as far as time allows, you can stay here, then we can have a free discussion and Q&A time from now on. Okay, so is anyone can start? Manuel, can you talk about what we're planning for the next webinar?
Thank you, Alex. Yes, and actually want to first thank you and Jean also for a great presentation. One thing, and your title is very clear on that. One thing is, and in Jean's presentation, I've noticed the same topic. ESG, it's only part of a bigger picture of the risks and the benefits of using ESG for companies. On the benefit side, of course, the ratings count more and more on the quality of the bonds and the bonds that are offered. So it's clearly a financial impact on the company. What is missing, and the angle we will be taking on the next webinar, is how to integrate another major factor, which is technology, which is coming in the form of digital transformation. So short story, ESG, it's a profound and complex transformation of the companies as they pivot not only to profits, but to move also to the environment and the social aspects, and of course with under governance. And the other major investment, it's in what is called Industry 4.0 and digital technologies. So very soon we'll have an announcement about the next webinar, and we'll be happy to talk more about that. Again, thank you, Jean. Thank you, Alex.
Thank you. Sansan, are you there?
Yes, I'm sorry for Paul, but
that's okay, because yeah, she is now in Italy, so is far away from here. So, but anyway, can you add more about my presentation about the FinScience AI solution, or your insight about the next generation like assessment solution should provide?
Yes, as to your presentation, I think it was awesome. So thank you very much, Alex, for your presentation. I would like also to highlight that the most innovative part of FinScience solution is represented by the fact that we integrate NLP technologies, therefore natural language processing technologies, and therefore we integrate in the score also the digital diffusion and sentiment indicators, and these are part, of course, of the external evaluation and the external score, which is on which the overall score is based. So I think this is one of the main innovations related to the we can say of our solution, and the fact that we provide the score for each of the SDGs is another major innovation, I guess, especially if we compare our solution to the solutions of our other providers. And moreover, and I know that there are other providers of ESG data that collect news and social media data, but another interesting thing is that among the external data that we collect, there are also, for example, the employee reviews and also customers reviews that are usually not collected and taken into consideration by other providers. So I wanted just to highlight the most, I think, innovative and also specific features of FinScience solution. I don't know if there are specific questions, other questions from the audience related to our methodology, for example, or but of course, if you have questions, you can write to me, and you can find my LinkedIn profile. I think in the program. So I'm available for questions and for clarification.
Okay, thank you. Is there anyone then have a comment or anything insight you want to talk about?
Hi, Shan, this is Gene. I just have a question around your NLP. Is that a news related NLP or Twitter type? I've seen some of these, for controversies. So I was just curious, where are you, where are you pulling your data?
Yes, as to the NLP technology, we use it for news especially, but not only on news, because we also use them in order to classify paragraphs of the sustainability reports, and also for the classification of websites, corporate websites. So we use our technologies for many different kinds of texts. We try to, of course, identify the company, the entity of the company, together with entities related to the Sustainable Development Goals, and then measure the level, and this for all kinds of texts. And for news in particular, we also identify the popularity indicator and the sentiment indicator, and we obtain a value which is the sentiment weighted for the popularity, which we integrate in our score for each of the 70 Sustainable Development Goals. I don't know if I replied to you.
Yes, you did. Perfect. Thank you very much. That's a good amount of information there. I'd like to reach out to you afterwards. Thanks.
Okay, perfect. Thank you.
Okay, so is there any comment or the question or insight you want to talk about? Okay.
I have a quick question for Gene, if that's Gene. I noticed on your slides actually that, and it's one thing which I'm really focused on. When ESG is used for risk assessments, it is not sufficient to get an ESG score. Actually, I think that the Singapore Board of Directors call it ESG, which includes the economics part, the financial part. What's your experience from the industry with using a larger score than just ESG? A lot of companies are relying purely on ESG scoring, or
I think the challenge with the industry right now is if you're just looking at ES and G, you maybe don't have the whole picture. And I believe that, relatively speaking, there's so many ratings, and if you go to any exchange or a lot of these other groups that have been around, some of them, they're not necessarily 100%. The methodology may not be there available. They may work directly with corporates to provide, say, like a questionnaire to get some of that qualitative data to give you a rating, but then you're not really sure of what that rating is and what are the relative metrics behind that rating. So I think, relative to asset management groups, I think their challenge, from what I've heard, is I've used this term loosely, but that some of them have taken sort of a breadbasket approach, where they've taken 8 or 10 of the ESG ratings, and they look at them every quarter or monthly, whatever it is, and then now they're sort of trying to figure out what a baseline is, or which ones that they feel align with their risk or their investment criteria. And and now we're adding in much of what has been discussed today around sentiment and things around NLP. I've seen quite a bit of that coming, relative to their controversies, and how does that affect the performance of the ES and G, and is it how negative is that? And how positive are those, is that news? So I think the challenge again is just the amount of data that's there and the number of ratings that are there. And many times you'll see some of the original companies that are doing the ratings, there's a rating for a company that we know, historically we would screen them out because of what they are. Maybe they're a tobacco company, or maybe there's something that, really isn't, it wouldn't normally fall in our high ranking and sustainability approach through ESG. And then they're in the rating and they show up there as they've gotten high scores. So I think there's a little bit of controversy around that and some challenges, but I think as time goes on, they'll start to understand more around that and how it relates to the financial data and performance over time. Historically, you can go back and look and see the correlation between ESG and that data, as long as you have enough data. I think many of them are giving ratings when there really isn't even enough data to do that, or the companies or corporates are providing data that of metrics that are easy for them to provide. It's a checkbox versus a number, and the rating is something that's difficult to translate into what does that really mean for risk, and what does that mean for potential opportunities. So I think there's a lot of work to be done, and I'm excited to see the next round of the blockchain and digitization. Yeah, I think that's going to be
Thank
good.
you. Well, to be continued.
Okay, thank you. So I have the question in the chat window, but I don't exactly this. The question is that is it for scoring or reporting, or also scenario planning? So I didn't catch exactly the question.
Yes, Alex, apologies. And when Shenzhen was talking about using NLP, it was definitely for ratings and scores. I understand that. I'm just curious if the company is also doing any use of AI in terms of scenario planning. So getting a little bit to what Jean is calling kind of risk management, using scenario planning to forecast risk or look for opportunities to decrease risk that would end up ultimately showing up in the ratings and the ESG scores, but just wondering if that aspect is being explored.
Oh, I think that's a very good question, because maybe I cannot give you the exact answer, but I can give you some my thought. Because the scenario planning, what you're doing is you want to expect something, you want to predict something for the future happening, and then under like uncertainty, right? So the scenario planning is not the automatic ways to do, right? So everybody, you have like a brainstorming and teamwork, and then require a lot of effort. And so I also have experience for the predicting something like what kind of for example, I'm an innovator, so what kind of some new digital technology can be used in the future, something like that. So particularly for ESG sustainability space, we want some risk, right? What will happen, and then especially they are related to forward-looking ways to look at what will be the impact, and what will be the impact on the company and the impact on the other society. So my thought is that it might partially possible because of I'm also AI expert. So in my view, that I'm in my solution, what I'm going to do is as a way of the forward-looking assessment. The AI can have a predictability, so they can predict something. It's one key function of the AI, but it depending on what kind of available data is you can use, right? All the prediction of the future is depending on your previous history. So as far as I understand, we can do some part that, but I don't know about how we can actually including these risk factors with uncertainty, because I never heard about some AI can handle this uncertainty. Only ways that they can provide all possible scenario, right? And then we need to provide, because AI is not all. So we can provide something that AI can have a sort of about like whatever the optionally can predict some specific scenario. Then maybe I can do that. I think that's very good idea to me, because I was thinking about how I can including the kind of scenario planning, but especially for the future prediction. And then I try to include in my solution to the kind of like predictability of this AI to including the scenario planning. But still, I need some research how I can include this uncertainty inside of this scenario planning to that AI can predict. But I think maybe can do. Yeah, let you know. I will let you know. Yeah.
I've done some research in demand forecasting, and there's a good analogy here. If you ask someone how to get the best forecast, the way to get the best forecast is to forecast it 10 minutes before you actually need the forecast.
Mm-hmm.
So I understand with AI, we can't necessarily predict things that have changed rapidly or have never occurred, the black swan type event. But I think there are some indicators that would help us look forward, but it's going to be a challenge to figure out what those indicators are, what the most important indicators, and those are going to change over time too. So,
Oh yeah.
Kim, if I would add, that's very interesting to us here at CRD and Susco. We certainly consider leading indicators and what we can do with AI and sensitivity analysis related to demand forecasting. So I don't want to go deeper into that, but more to come on that. I think that you're really targeting something very, very important around both the demand forecasting, leading indicators, and using AI to create those sensitivity analysis relative to ESG performance and NLP types of data.
Yes, thank you.
We did a bit of research also, and in black swans, and actually, interestingly enough, you can group them. You can look at black swans. I'll give you really very quickly an example. It doesn't matter really what the discontinuity is: pandemic, earthquake, flood, typhoon, whatever. A meteorite that hits the headquarters. The headquarters, it's off. Now you can do scenario planning on how you recover from a catastrophic event. So you can look sort of from a different perspective and different relations between the pieces. Anyways, don't want to take too much time.
Thank you. Yes, that's interesting. I like that perspective.
Okay, so it's almost time. And then is there any other question or comment that I'm calling a day of today's webinar? Okay, no questions, right? Okay, so thank you for attending today's webinar, and then I hope that you have the rest of your time is enjoyable and a big time. Okay, thank you. Take care. Bye-bye.
Have a great day.